let's talk about one of the most important financial decisions you'll ever make. And you know what? It's also one of the easiest to get wrong. We're talking about your life insurance beneficiary. A simple oversight here can completely and unintentionally redirect your entire legacy.
I mean, really think about that for a second. Imagine you've paid your premiums for years, maybe decades, thinking you've got your family covered. But what if, because of one piece of paper you forgot to update, all that money goes to an ex-spouse, or gets tied up in court for years? This isn't just some scary story. It happens all the time.
So let's start with the single biggest, most costly mistake people make, and the one simple rule that can prevent it all. Okay, if you remember nothing else, remember this. Your will means nothing when it comes to your life insurance payout. You can have a perfectly drafted, recently updated will leaving everything to your kids. But if your ex-spouse is still listed on that policy, guess what? They get the money. That beneficiary form is a legally binding contract, and it trumps your will every single time. So what if you just don't name anyone, or your beneficiary passed away before you? Well, the money doesn't just go to your next of kin. Nope, it gets dumped into your estate, which kicks off this long, public, and expensive legal process called probate. Think of it like a legal black hole. Creditors can suddenly show up and claim a piece of that money before your family ever sees a dime. And after all that, a judge, a total stranger, gets to decide who gets what's left, not you. All right, to avoid that nightmare scenario, let's just quickly cover the basics. What exactly is a beneficiary anyway, and why does this one little name on a form hold so much power? It's really as simple as it sounds. The beneficiary is just the person, the trust, or even the charity that you pick to get the payout from your policy when you die. It's your direct instruction to the insurance company saying, when I'm gone, give the money to them. Okay, so who can you actually give that money to? Well, you've probably got more options than you realize, which gives you a ton of flexibility. Now, this is where it gets interesting because there's a real trade-off. Naming an individual, say your spouse, is super simple, it's direct, it's fast. The money goes right to them. The downside, you have zero control over how they spend it. On the other hand, naming a trust gives you incredible control. You can lay out specific rules for how and when the money is used. But it's definitely more complex to set up and takes a little more time. And you're not just limited to people or trusts. You can name your favorite charity, for instance, and leave behind a really meaningful legacy. Or, in the business world, partners often name each other as beneficiaries. That way, if one of them passes away, the other has the funds to buy out their shares and keep the business running smoothly. And here's another key thing. You're not locked into just one choice. You can split the money up however you see fit. But maybe even more crucial is naming backups. These are called your contingent beneficiaries. Honestly, think of it like a backup parachute. You really hope you never need it, but you absolutely have to have one just in case. So, for example, you could do something like this. You could give 70% to your spouse and then 15% to each of your 2 kids. You have complete freedom to set these percentages however you want, tailoring it exactly to what your family needs. So, knowing the options is step 1. Now, let's talk about the common mistakes that can completely derail your best intentions. This quote really just hits the nail on the head. Life happens, right? People get busy, and it is so incredibly common for people to forget to update these policies after a major life change. And that's what leads to these heartbreaking mistakes. So let's boil it down to the 3 critical errors you have to avoid. First, like we just said, always name a backup. Second, whatever you do, never name a minor directly. Insurance companies can't legally just hand a big check to a kid. A court has to get involved. That's where a trust comes in handy to manage the money for them. And finally, the biggest one, the set it and forget it mentality. This isn't a crock pot. It's a living document that needs to change as your life changes. All right, we've gone over the rules, the options, and the big mistakes. Now, let's turn all this talk into action so you can make sure your legacy is actually protected, starting today. Look at this list. If any of these apply to you, this is your wake-up call. Has it been over a year since you even looked at your policy? Time to pull it out. Just got married or divorced? This should be one of the first things you update. New baby in the family? Gotta make sure they are accounted for. These are exactly the moments when a quick beneficiary review is absolutely essential. So we'll end with this. The name on that beneficiary form is more powerful than your will. Forgetting to update it can throw your entire legacy into chaos. But the good news is it only takes a few minutes to check your policy and make sure everything is exactly how you want it. So, the only question left is your legacy secure?